Hi traders, and welcome to the Technical Analysis Market Watch on Friday the 15th of September. So I've seen some pretty good action this week, especially in the last 24 hours on some of the key indices and probably just as importantly the euro. So we'll jump straight into the charts and see if we can identify any trades for today or early into next week. All right, so we'll start out here with the Aussie USD. And you can see, look, from last week's behavior, we knew that it was at a level of support because previously it's been here several times, as you can see, right through these zones here and at this touch here, and reacted quite strongly off it. And it was no different last week. We had a couple of wick candles and then off it went. The logical target's always going to be the 20 moving average moving forward once you do land on support, because realistically, it gravitates to that like a moth to a flame. And you can see it happens all the time. Even with the levels here at the 20 moving average, that was a resistance zone as well. It came up, touched the 20 moving average and sold off. Look, it tried to go higher, no question about that, but failed again. The 20 moving average did pull it up, which it has done basically since its highs all the way up in basically the middle of July. So realistically, we have to look at this and say, if it doesn't get above the 20 moving average with a daily close, we still have to consider it a weakening trend. Even though we can see a bit of a rounding bottom here, potentially support being found at this level, we have to be very, very mindful that the 20 moving average is holding it from reaching the same similar high at that roll reversal zone. So if we get a close above the 20 moving average, then we can start to look at targeting the 65-cent mark. But while it's trading under the 20, I'd be looking for a reversal of some kind on a smaller time frame, any series of lower highs and lower lows, and then look probably to reach the bottom again at around that sort of 63, probably 63.70 to 63.80 mark would be the target there on a short position. But I'd only be going for scalping opportunities in this instance until it either one breaks above the 20 moving average on a daily chart, or it does basically break this level once and for all, and then we're going to be starting to target the just below the 63-cent mark. But while it's trading inside this zone of 63.80 and effectively the 64.90 to 65 level, in this zone would be scalping in between those two zones. When we get a daily break though, that would look for a bigger move past the 65-cent mark, but it's got a lot of work to do before it does that. And on the buyer side, it looks more weak than anything else because it's really doing a series of lower highs and lower lows. So look for a break below 63.80 before we go shorter, or a break above the 65 before we start looking at long positions. But in the meantime, scalp to your heart's content inside this zone. So yeah, good opportunities there. All right, we'll jump into the US dollar CAD now, and you can see the sell-off has certainly kicked in this week. We hit those resistance points, and look, like I said last week, when they do break above a very serious resistance point, it's not the place that you want to be just jumping in and saying, all right, we're going to new highs now. Always wait for that reversal. I always love to wait for a reversal, and see if this candle here had have stopped and given us a series of higher highs and higher lows on a smaller time frame, it would have been a very different story, and then you can sort of build a position above that resistance. But when it does fail like it did, and then basically follow on with another big red candle, you're really looking to the lows of the next support, and that was the 135 mark, as you can see through there. Now, this is an important level, not just because it's a round number, because it obviously is a round number at 135 and a psychological number, but also you can see right through here, it was a landing zone for quite a bit of support through that area, right through here. It was resistance there, and again resistance there for about nearly a week. So it's a very important zone, and it is one that you would expect it to land on following a big move down. I would be surprised if it broke through there without giving a yelp of support at this level. If you were shorting from this candle here, which is the obvious short, this is the level that you would have been taking profit on. That would be your target. But I would be very mindful, though, at this level that we would expect some sort of support or at least a rebound. So just be careful shorting any further than this until it actually does break through. Once it does break through the 135 and starts testing it from below it, that's a different story altogether. Then we'll be looking to the next level of support. But until it does that, maybe look for a bit of a retrace up to the 20 moving average if we get a series of higher highs and higher lows on the 135 boundary. And if it does close again above the 20 moving average, then we can start looking at the previous resistance again as the next point of call for the long on the CAD. All right, over to the US dollar yen now. And yeah, this has been dynamite in terms of technical analysis, because it really has been very, very sharp on the levels and also on the 20 moving average. And yeah, when we were talking last week, we knew we were at a point of resistance, and we were looking for a bit of a pullback down to the 20 moving average, which is your target. Now, I was asked during the week, how would you actually trade the 20 moving average if it did actually touch it? And really, the best way to do it is to find the role reversal zone that's close enough to it. So as you can see, we've got two peaks here at 146.30, which is it's a very strong level, because it stopped it twice before it actually did its march on. So you basically pop a horizontal line at that level before you go to the smaller time frame. So straight away, you know that you've got two peaks that you can use as a support base if it does bounce there. Then you go to the smaller time frames. Once you've got that mark leveled, say you could probably go to a 4 hour or 1 hour, go to a 4 hour first and see how it interacted with that level. As you can see, came back and then went through, but it doesn't really give us a series of higher highs and higher lows. So we needed to be a little bit sharper on that. So we can go down to a 1 hour chart, and as you can see, the same line that we're talking about here is that zone that is going to be a very realistic support. And once it starts to cycle through here, you can see it landed below it, then came up, tested it above, and once it started to cycle through, that was your entry point. So that's why it's so easy to trade when you're using a 20 moving average as your guide. You can see here that once we've got the series of higher highs and higher lows, first touch, entry point, second touch on the 20, entry point, third touch on the entry on the 20, another entry point. So you can see you had 3 quality entry points all the way down that could have got you to the previous highs at around that 147.50. So that's the best way to trade it. Mark the levels on the daily. That's why the daily is such an important level to actually put your zones in, and then go to the smaller time frames to actually trade it. So pretty good trading on the yen. Look, if it gets above the 147.80, then we're going to start looking at a different beast. But until it does that, I'd be looking at taking profits around this level. Let it do its job. If it fails around here, I'd wait for a break of the 20 moving average on the downside before I would look at taking any potential shorts down to that 145. All right, over to the dollar index. The star of the show has been basically, it looked strong last week. It looked like it was only a retrace, and it proved to be the case. It came down here, touched the roll reversal zone, as you can see. All of this pressure here that was stopping it from going up in the first place. You can see all of these peaks right through there, pulled it up again. And once it did that, it turned around, then it has broken through the 105 now. So look, it's looking like a pretty solid move up. The euro is really the one we want to be trading here, of course. So we'll jump into the euro, and you can see a big sell-off and basically a break of that very key zone at around that 106.80. We know it was very strong support. You can see all of the peaks through here, resistance and support. So it makes it a roll reversal zone. Now that it's broken through, it looks like it's very likely to close well below this level now. Look, the target's going to be the 105. You can see here the next real target is the 105.20 area. You can see very, very strong support there and a little bit of resistance prior. So that's going to be your logical target. But in reality, though, I would be waiting for a test of the 106.80 from below it now. Get that little bit of resistance, because really we don't fully expect that it's going to go straight down there without some sort of resistance. It's been tracking down for quite some time, as you know. We're making a series of lower highs and lower lows. It's certainly been playing the game from a sell-off standpoint, but I wouldn't be looking at longs until it's well and truly trading above the 106.80 on a daily candle. If it doesn't get there, then I wouldn't even be looking at a long. But if it does retrace up to this level and then flips over on it with a series of lower highs and lower lows, then we can look at shorting it down to the 105 in a systematic approach, similar to the yen. Go to the smaller time frames and trade the 20 moving average. All right, and the US 500, look, at bounce off here. We can see here we've bounced off the 20 and the 50 moving average this week. It's had a reasonable move up today, up to the 4,500 level, which is the level that we'd really expect it to. That's the point that it was previously. It needs to break that level before we get excited for the long. The trade was to the 45, so hopefully you were able to get that. If it rolls over here and fails to make a new high, then we'd be looking at shorting opportunities back down to the basically 20 and 50 area, which is about a 50-point move. I wouldn't be looking at anything more sinister than that until it actually breaks either lower than the 44.30 or above the 4,500 for daily candle. Until it does either of those two things, I would still be scalping inside this zone, and it's provided a very good scalping opportunity over the last few weeks, no question about that. So it's been really, really good in that regard for technical setups from the highs to the lows. So if you're able to get those, that would be great. But don't look at longer term time frames, in my opinion, until it's above, trading well above the 40, 500 and probably 30 on a daily. Then we can look at moves back up to the high sort of 4600s, or a break below the 50 moving average on a daily, which is below the 44.30 area. Then we can start to target the 43.50. So both of those are very liable trades, viable, I should say. And they would be if they get the daily closes above those highs or below those lows. But in the meantime, just trade inside that for your scalping opportunities. Thank you so much for joining me today. I hope you've had some really good trades this week. I think we've had some great opportunities from the levels that we've been talking about. Have a great weekend, and I look forward to seeing you all next week.